Being a sole trader or a partner in a business partnership are very popular ways of starting a business. This video will explain what it means to be a sole trader or partner. It will also explain what self-employment is. Once you've watched this video, you should be able to decide whether or not being a sole trader or in partnership is the better option for you. So, what is a sole trader? It is generally someone who runs their own business. Unlike other forms of business, a sole trader is entirely responsible for any debt the business may have. This means that your private possessions could be at risk if your business fails. This might seem like a scary thought, but don't let it put you off. There are many advantages to running your business as a sole trader.
Louise lives with her partner Patrick. They have a 3-year-old and another child in his 2nd year at primary school. Patrick has a full-time job during the week. However, to supplement her family's income, Louise works 20 hours each week at a call centre for a credit card company, mainly weekday and Sunday evenings. When she has time, Louise makes her own jewellery, which she sells on her website. The credit card company pays Louise a monthly wage, which has had income tax and national insurance contributions deducted from it. This means that she's an employee of the credit card company. But Louise is also a sole trader. Why? Well, she's a sole trader because she's responsible for making all her own decisions for her jewellery making business. For example, she decides what materials to buy in order to make the style of jewellery she wants to make. She's also able to decide when to make the jewellery. Useful when she has so many other demands on her time. And what about actually selling the things that she makes? Again, it's up to her how she chooses to do that. We know she already has her own website. However, she's thinking of selling to customers in person. So she's contacted the local council to discuss getting a licence to have a stall at the weekend market in town. She's also spoken to an events promoter to find out how to get a stall at the major outdoor festivals and other open-air events next summer. What if her business starts expanding? She might need some help. Someone to run her website perhaps, or manage her paperwork while she's busy selling rings and necklaces at the festivals. If she starts employing someone, she becomes an employer. But it's important to remember that being an employer doesn't mean she stops being a sole trader. She can still be both. So, with or without an employee, Louise is definitely in charge of her business. This means she's self-employed and must therefore tell HMRC she started in business. She'll also, in due course, have to complete a tax return. You'll find out more about these tax issues later in this video.
Okay, so those are the kinds of things you need to think about as a sole trader. But what about partners? Well, partners are members of business partnerships. There are 3 types of partnership: ordinary partnerships, limited partnerships, and limited liability partnerships. However, we'll concentrate on ordinary partnerships, as this is the most common type of partnership for people starting up in business. An ordinary partnership, or just partnership for short, is basically 2 or more people coming together to jointly run a business. Like sole traders, partners are personally responsible for any debts the business may have. However, there are many advantages to running your business as a partnership. For example, having partners means your business may have a wider skills base and more possible sources of business finance.
Meet Jacob. He used to have a fairly well-paid sales job but didn't get on with the boss. So before resigning, he started looking into setting up his own business. What Jacob needed was certain specialist skills and knowledge, and he felt that his 2 old school friends, Alan and Navendra, fitted the bill. Jacob knew that Alan, just back from his travels in Asia, had been keen on art and design from an early age. Jacob had also recently found out from Navendra's page on a social networking website that he'd helped build a website for his father's business. So one day, Jacob sent his 2 friends an email, proposing that they set up a marketing and design firm. Alan and Navendra thought the idea sounded good on paper, so they set up a meeting to discuss it. The meeting went well and the 3 agreed to set up as soon as possible. Jacob and Navendra also agreed to put some of their own savings into the business to help get it started. There are no set rules on running a partnership, so a month later, and with the help of a solicitor, the boys finalised a written agreement on how they'd make decisions, share out the various responsibilities and divide the profits. The agreement stated that Jacob and Navendra would each get 40% of any profit the business makes in the first 2 years, while Alan would get 20% as he was unable to provide any finance. Just over 2 years later, and despite some continuing difficulties, the business is now beginning to get some well-paid work. So what we have here is 3 people coming together to run a business. A partnership, in fact. However, partners are self-employed individuals and therefore separate for tax purposes. This means that Alan, Navendra and Jacob must each give details of their share of the business profit on their individual tax return. We'll talk about individual tax returns later in this presentation. However, if like one of our 3 friends you're in a partnership, one of the partners must be chosen to complete a separate partnership tax return for the business as a whole. This is in addition to completing a tax return for themselves.
So, sole traders and partners can be quite different in terms of the way they run a business. Sole traders run their businesses alone, but can sometimes have employees. Partners, on the other hand, work with each other to reach business decisions or raise finance. However, one thing that they have in common is what is called their employment status. For tax purposes, you can have an employment status of employee or self-employed. However, you can be both self-employed and an employee at the same time. Now, if you're a sole trader or a partner in a business, you're considered to be self-employed.
Have you ever thought about your employment status? If not, it's usually quite easy to tell what it is. Have you ever worked for a firm that pays your wages or salary every week or month? If the amount you earned had income tax and national insurance deducted from it before you received it, then you were an employee. If you did some work for someone and they just paid you a fixed amount that you'd agreed in advance, this might mean you're self-employed. But wait, to be on the safe side, don't just think about the money you receive for the work you do. Think about the way you actually do the work. Do you provide the main items of equipment you need to do your job? Do you regularly do work for different clients or customers? Do you have to correct wrong or faulty work yourself? And what about running your business as a whole? Do you, along with perhaps one or more business partners, put your own money into the business and decide how the business operates? If the business makes a loss, does it affect your personal financial situation? Do you yourself have to find ways of making sure the business gets back into profit? Answering yes to most or all of these questions strongly suggests that you are self-employed. But don't forget that you can be both employed and self-employed. For example, you could have a job as an employee during the week, but run a business as a self-employed person for a few hours each evening and over the weekend. Hopefully you won't ever have too much trouble deciding what your employment status is. However, if you're ever unsure, you can't just decide on your employment status yourself. Instead, your employment status is decided by your actual relationship with the people or organisations you do work for.
Once you're self-employed, you'll need to tell HMRC. By telling HMRC, you'll be registering for self-assessment and Class 2 national insurance contributions. You must tell HMRC you're self-employed, even if you're also an employee. The easiest way to register with HMRC is to fill in an online form on their website. The other options are completing the form online, then printing it off and posting it to HMRC, or registering with HMRC over the phone. Whichever way you choose to register, you'll have to complete a self-assessment tax return. The easiest way to do this is online. But be warned, before you can complete your self-assessment tax return online, you must register with HMRC's online service. This takes a week or two to sort out, so don't leave it until the last minute. And one final point, don't forget to keep good business records from the start. You must do this as it's a legal requirement. So, whether you're a sole trader or a partner, for tax purposes, you're working for yourself and are therefore self-employed.